Okay, team. So today we're going to be talking about take profit and stop loss. And it's pretty simple. Take profit is a number that you're going to place in your MetaTrader 4, typically an area of market structure, where you would get pulled out of a trade in profit. This means that it has gone in your direction and you won. So your trade's in blue. Your stop loss is going to be the risk that you are willing to basically lose if a trade does not go in a direction that you anticipate. And what that means is if it doesn't go the way that you want it to, you'll get pulled out of the trade and then negative. But you can determine what risk you're willing to take per trade. So, in the next video, you will learn about risk management, and I show you how to do that with a very simple tool. But right now, what I'm going to do is just give you an idea on how to identify your take profit and your stop loss. So, let's get to it. All right, so we can clearly see, and I'm on the 15-minute, and this is a pretty good time frame for intraday, so it's a 1 hour. We can see here that the market is making lower lows and highs, so we have a bit of a downtrend. So one thing we can do to help identify the trend is remember, draw that trend line. Let me not make it so big or thick. Okay, so what we're looking for is basically for it to respect that trend line like you learned in the previous video. Now we want to get in when we see that there's rejection at this trend line or previous structure, as you can see right here. So we have our structure for confirmation and we also have the trend line. So the goal is to get in around here. So if you use this tool, and this is the 7th icon, you have one for long position and short position. And a short position is a sell, which is bearish momentum. A long position is a buy, which is a bullish position. So you may have heard of like bears versus bulls, and that's what that is. In this case, because we're going to sell, we're going to use a short position. So it's very easy to remember them. Short for sell, and they both have an S. So we're going to click on this tool, and we know that we want to wait for the market to come back and pull back or retest that previous structure that you learned in earlier videos. So the goal is to put your entry around this area, okay? Around here or here. This is the goal. This is what you want to do. This is where you want your trade to trigger. Now, for take profit, what you want to do is use previous structure to your left or any major key levels, okay? So what I'm going to do is I'm just going to quickly do a line chart, and we can see that we have like a pullback area here. I'm going to quickly just put a line there. I'll go to the 1 hour to see if it's respected. Let's go to the 4 hour real quick. And we can see that it's a pretty respected area right around here. I'm going to put my candle so you can see. Okay. And this is going to be our ideal take profit. So where we want to pull out of the trade. Okay. Now, if you're not looking to make this many pips, I would recommend as an intraday trader to start off with maybe 20 pips, 20, 25 pips, maybe 30. Okay. So if this is too much for you, you can use this next level of structure, which is right around here. Okay. And this could be a very simple trade. So it's about 20 pips, 23 pips, which is not so bad. Excuse me, hold on, about 25. So the goal is in this case, usually when we're figuring out a stop loss, we want to put it above the previous high. Now, this is too big, and you never want your stop loss to be bigger than your take profit. That would not make any sense. So what we want to do is look at another high point that was respected besides this one. And if we literally draw a level right here, we can see the market pretty much respected this area. So you can bring your stop loss all the way down to here, okay? And we know that in the event, if the market decides to not respect our analysis and goes in the wrong direction, we would get pulled out and we would lose. But this is just how you can find your reference points. Now, you don't want to be too cheap, okay? You don't want to do like 5 pips for 20 pips because you have to factor in your commissions by your broker. But this is a way for you to just be able to spot how you can put your stop loss, where to put it. Look for previous highs. Yes, there's one here, but we notice the market respects these areas. If the market decides to go in the opposite direction, then your stop loss is going to save you from losing any more of your capital. If you don't enter a stop loss and this trade decides to go all the way up, let's just say it goes up maybe 100 pips, you could potentially lose all your money and wipe out your account, which is a lot of people are known for doing that. A lot of people are afraid to use stop loss because they don't know how, or they're afraid it's going to get stopped out and then start going in the direction that they anticipated. And trust me, that does happen, but you have to just suck it up and look for another opportunity. So, for example, if that would have happened and you would have been stopped out, there was another area of market structure right here that the market respected, okay? And you would just literally put your stop loss. In this case, you're going to be going for more pips. So you're going to put it above the previous high, which is this high right here. And you're going to go to the next level where the market stopped. Okay. Actually, probably go down here because this looks like it has more hits. So now it's a little bit more of a risk. You're risking, oh, wait, guys, hold on. All right. So this is a 1-to-2 ratio. Oh, excuse me. I'm just going to bring this down. This would be a little bit better. So you can do, one trade to maybe right here where there's like a stop in the market, another trade to right here, or to your key levels, which is something that you definitely want to have. I would recommend trading level to level until you get more advanced with market structure. And you're going to learn other ways that you can learn how to take profit and utilize stop loss. I do go over this in my advanced course. We cover how to do it with many other tools, and they're super, super helpful. But this is just how it looks for a sell. Okay. So now we're going to do something for a buy. Okay. So we can see here that there is an uptrend. Mhm. I'm going to actually do this, even though there's some slippage. Hold on. I don't like this one. Sorry, y'all. So we can see here the market is moving in an uptrend. We have higher lows and higher highs for the most part. So what you want to do, again, you want to look for that rejection on that trend line with those candlesticks that we discussed. And the goal is to get in on the respect of the trend line. So typically what you'll see is maybe about 2 to 3 candles rejecting that area, especially on the lower time frame, to help give some confirmation that it's going to continue with the direction that you analyze on a higher time frame. So for the buy, you're going to choose a long position. You're going to use this area as your entry, okay? And what you want to do is put it below the previous candles. So you see these candles right here? You want to make sure your stop loss is below that area because if the market decides to go, further down, then there could be a change in direction. And yes, there are manipulations. There's not much we can do about that, but this is what you want to do. And you're going to use your previous market structure. So we can see here that, sorry, right here in this area, maybe a little bit lower, we have some touches in respect. Here we go. I'm going to do it like this. There's some respect to this area. Previous market structure respects it. And every time it did, what happened? It came back down. So we want to buy and we want to make sure we're not overextending it. So we want a profitable trade or a high probability trade. So we're going to take it to this area because what? We know that every time so far it's hit that area, it's come back down. So we want to increase our chances of winning. Now, there's obviously a possibility of it breaking out, retesting, and giving us a continuation of the buy trend, but we don't want to be greedy. Until you practice more, you'll be able to go for more pips. The goal here is to go for about 20 to 30 pips so that you can have a high probability trade, understand where to place your stop loss, and take profit. So you can see we have our stop loss below the previous low. We also have it below the trend line because typically trend lines are 90% stronger and they're respected more. And then we have this here. So we're risking about 12 pips. And if you don't feel comfortable with that, you can always use the previous low, but you want to make sure your risk to reward ratio is not like, this is too much. Like this is too big of a stop loss. This is an opportunity for a really great entry. You don't have to risk too much. Great risk to reward, and bam. So if we look at this, I'm going to drag this out. It took from our entry for take profit, it took about 19 hours for this trade to hit our take profit. So this is another thing that you're going to have to be ready for psychologically, is trusting your analysis and giving it the time that it needs to go in the direction you anticipate. Now, if this trade had decided it was going to go down and retest that trend line, then obviously your buy bias is going to be void. You'll need to reanalyze it, identify the market structure, place your key levels, and find an area for a sell. But for this right here, we're using previous market structure, which is also a key level. We're understanding that the trend line is stronger and placing our stop loss slightly below the previous low, which is right here. Excuse me, let me move this. You can see where we have like the candles right here, just respecting this area, okay? And then bam, that was your opportunity to get in. So I want you to identify, look for a setup and find where you would place your stop loss and your take profit for a buy and a sell, and see if it makes sense. Before you post anything in the group, if you want to, I want you to watch the next video on risk to reward, or risk management, so you can understand the importance of having a certain ratio with your trade ideas. All right, guys, go ahead and start practicing.